The financial landscape, it feels like it's just on warp speed these days, doesn't it?
It really does. Hard to keep up sometimes.
Yeah, one minute we're, navigating traditional markets. The next, digital assets are really demanding attention. If you're like me, you're constantly trying to connect the dots, understand the real implications. So let's get right to it. Today, we're diving into a really significant piece of that puzzle, OCC Interpretive Letter 1184.
Okay.
We've got some great analysis here that unpacks what this means for banks and starts to sketch out, well, what's next for credit unions with crypto custody?
Right, because the guidance is primarily aimed at banks, but the ripple effects are wider.
Exactly. So our mission really is to cut through the regulatory jargon and figure out what this clarity actually signals for crypto within our, familiar financial institutions.
Absolutely. And this isn't just, another minor update. This letter from the OCC, the Office of the Comptroller of the Currency, it really marks a turning point. Well, what's fascinating is the OCC's very clear declaration. They're saying regulated national banks and federal savings associations are authorized to offer digital asset custody.
Custody, okay. Holding the assets.
Holding the assets and even execution services. Trading.
Wow.
It signifies a pretty fundamental shift. It's not just about exploring possibilities anymore.
They're dumping in.
Exactly. It's about actively participating now.
Okay, so the headline is, banks can hold and trade crypto for customers. That's big.
It is.
And the analysis we have points out they can also outsource these functions, both the holding and the trading.
That's right, to specialized third-party providers.
Yeah.
But there's a key condition.
Always a condition. What is it?
They must have, and this seems really crucial, appropriate risk management practices in place.
Okay, so it's not a blank check then?
Not at all. The OCC is setting clear expectations here. This emphasis on risk management, it just underscores that while the door is opening wider, banks need to step through carefully, thoughtfully. They need a solid grasp of the unique risks involved.
Right. And you mentioned this isn't totally out of the blue.
No, exactly. It built on prior OCC guidance.
Yeah.
There were interpretive letters 1170 and 1183 before this.
Okay.
So 1184 provides that much needed concrete clarity. It really solidifies the regulatory foundation for banks wanting to get involved with crypto.
So beyond just getting the authorization, what's the practical impact, for the banks themselves? How does this change their strategy, maybe?
Well, connecting it to how finance is evolving, this authorization basically empowers banks to be direct players in the digital asset economy in a very real way.
Direct players, meaning?
Meaning they can offer crypto custody services, acting as, trusted guardians for digital assets.
Okay.
And they can facilitate trades directly for their customers, right, within their existing platforms, the ones people already use.
Okay. That's convenient.
Hugely convenient. And think about the advantages for the bank. They can keep customers who are interested in crypto.
Who might otherwise go to a crypto exchange.
Precisely. They can meet that customer demand directly within a framework their clients already sort of understand and trust.
And I guess that opens up new revenue streams too.
Potentially, yes. New revenue strengthens their digital offerings. It positions them as potentially vital infrastructure players in this whole evolving landscape.
The analysis we're looking at even gives an example. It says some banks are already doing this, partnering with infrastructure providers.
That's right. Providers that offer both the exchange part and, crucially, embedded compliance tools.
Compliance built in.
Exactly. They're aiming for a really seamless integration for the user. And just the sheer convenience, like you said, of having traditional and crypto holdings under one roof.
Yeah, that feels like a game changer for a lot of people.
It really does. It streamlines things. Addresses that friction point for people who are curious about crypto, but maybe a bit hesitant about, totally new platforms.
Okay, so convenience is key. But then there's the trust and transparency part. How do these traditional institutions handle that for digital assets? Especially at scale, regulators must be watching closely.
Absolutely. That's a crucial question. How do you maintain transparency, control, auditability? All the things regulators expect.
And our source material points to blockchain infrastructure as a solution, especially tailored versions.
Yes, exactly. Particularly when tailored for institutional use.
Yeah.
That's where this idea of private subnets comes in.
Right. The nightclub analogy. I thought that was pretty good. Can we unpack that a bit more? Why is that model a good fit here?
Sure. So think of the public blockchain like Bitcoin or Ethereum as the main floor of a big nightclub. Open, public, everyone sees the activity.
Okay. Busy place.
Great. Now, a private subnet, is like the VIP lounge inside that club.
Ah, ropes and security.
Kind of. It's a custom blockchain environment set up by, say, a bank. They control who gets in, what rules apply inside, what data gets shared.
So more control.
Much more control. Specific security, specific governance, tailored to their needs and regulatory requirements.
Yeah.
But, and this is important, it's still connecting to the main club.
How so?
It still leverages the core blockchain technology. You get the immutability transactions can't be secretly changed later. You get the clear, transparent audit trails. Things regulators love.
Okay.
Frameworks like Metal Blockchain, for example, provide the tools to build and manage these private subnets.
Yeah.
So institutions can innovate faster.
But within a safe, compliant space.
Precisely. It offers that balance.
Yeah.
Blockchain's agility and transparency, but in a controlled environment that meets those strict financial standards.
That makes a lot of sense. Okay, so banks have this clearer path now with Letter 1184, but what about credit unions? You mentioned the guidance is for national banks. Where does this leave credit unions? They're often so focused on community member needs.
That is a really critical question. Credit unions, they have this history of community-driven innovation, digital inclusion, and our sources definitely indicate their members are increasingly interested in digital assets too. So there's this growing pressure, really, for credit unions to find a way to participate.
Right. The analysis suggests that while maybe they've been using partnerships, third-party integrations for some crypto services.
Yeah, dipping their toes in.
This OCC guidance for banks might signal a future where credit unions could maybe move towards direct custody themselves. Is that feasible?
It would be a significant shift, operationally. But yes, the sources point out that many credit unions are actively exploring this. Through partnerships, pilot programs, they're trying to figure out how to offer compliant crypto services within their own systems.
So they're looking ahead.
Some definitely are. Looking towards a future where they might handle custody directly. Of course, that depends on regulators giving them the green light and having the right tech support. There are even specific innovation programs out there helping credit unions test these kinds of capabilities.
And if they can pull it off, offering regulated secure crypto services, that could be huge for them, right? Attracting younger members, staying relevant.
Absolutely. It's not just about demographics, so that's part of it. It's about meeting the evolving financial needs of all their members in a world that's, well, clearly embracing digital assets, ensuring their long-term relevance.
Okay, so stepping back, OCC Letter 1184, it's more than just a clarification.
Much more. It's a signal, a big one.
What's it signaling, fundamentally?
That the infrastructure is getting there, that the customer demand is real. And now, crucially, a more defined regulatory path exists, at least for banks, to really integrate digital assets.
Right. And the takeaway seems to be that institutions, banks, and potentially credit unions down the line who think strategically now
and act thoughtfully
will be better positioned for whatever comes next in terms of trust and value transfer.
Exactly. As the regulatory landscape keeps evolving, especially for credit unions, the focus has to be on blending that innovation push with robust control, meeting member needs and regulatory expectations.
It's a balancing act.
A critical one. As the analysis wraps up, it says, the future of custody is coming. For those prepared to meet it, the opportunity is substantial.
A clear call to action.
No doubt about it.
Okay, so to quickly recap for everyone listening, we've seen how OCC Letter 1184 essentially gives banks the go-ahead for crypto custody and trading.
With appropriate risk management.
Right. And we've explored the potential paths opening up, or at least being seriously considered, for credit unions in this space, too.
Definitely. The whole ecosystem is shifting.
It really leaves you thinking. And maybe here's a final thought for you to mull over. Considering how foundational trust is for financial institutions.
The absolute bedrock.
How might this deeper integration of blockchain, especially using things like private subnets, reshape not just custody, but maybe the entire relationship between financial institutions and their customers in this digital age?
That's a great question. It's not just about holding new assets, is it? It potentially changes how verification, transparency, maybe even shared control works. It really prompts us to think about the long-term transformation that might be